Hey everyone, ready to dive into the latest financial news? We've got articles stacked up from MarketWatch, CNBC, Investing.com, Seeking Alpha, even the Motley Fool UK. And
Yeah, it's a lot, from inflation and bank earnings to tech trends and Social Security, and it's fascinating how it all connects.
for sure. So first off, Wall Street got some good news. Inflation cooled down more than expected in December, 3.2% to be exact.
Yeah.
CNBC has the whole story. And
Shook things up. MarketWatch reported Treasury yields dropped, biggest drop in weeks. After the report, investors feeling optimistic could mean some relief from rising prices for all of us.
fingers crossed, right? And speaking of good news, big banks had a phenomenal fourth quarter. Seriously impressive profits from JP Morgan Chase, Citigroup, Goldman Sachs, Wells Fargo.
JP Morgan Chase hit a record profit. They say it's because of their size. Citigroup's investment banking was strong. Goldman Sachs trading did great. And Wells Fargo, their stock soared after a positive outlook for 2025.
That's a lot of good news all around, but hold on. CNBC also reported that Wells Fargo isn't too high on Tesla, predicting almost a 70% drop in shares. Why so gloomy?
Million-dollar question, right. Tesla's got potential in self-driving cars. But Wells Fargo is worried about their financial stability, competition from other electric vehicle makers, production issues, even questions about the safety and reliability of their self-driving tech.
Interesting. Positive news on inflation and banks.
Yeah.
But Wells Fargo is pumping the brakes a bit. Now let's switch to tech. CNBC says Microsoft is making big moves in quantum computing, pushing quantum-ready solutions and causing a surge in stock prices for that sector.
Yeah, this is significant. It shows quantum computing is going from theory to reality, practical applications. Microsoft's saying get ready for the quantum future, and investors are listening.
So what exactly are these quantum-ready solutions? I mean, I know quantum computing is supposed to be powerful, but what's that mean for businesses and everyday people?
Think of it this way. Quantum computers solve problems that even the most powerful regular computers can't. Could change medicine, material science, even finance. And a quantum-ready solution means businesses can start getting their data and systems ready for this tech when it becomes more available.
Makes sense. But then there's TikTok. Facing a possible ban in the U.S., CNBC reports they might even shut down this Sunday unless the Supreme Court intervenes. Huge consequences, not just for users, but for the whole tech world.
No doubt this raises questions about data privacy, national security, how powerful social media should be. Complicated issue with no easy answers, and the result could change how governments handle tech in the future.
Definitely something to watch. Now let's get personal. MarketWatch has an article about financial advice being mostly for people with kids, leaving those without feeling lost, kind of overlooked.
Absolutely. Financial planning needs to be personal. The author of The Childfree Guide to Life and Money is really pushing for that. Estate planning, retirement savings, even just budgeting, it's all different when you don't have kids, and the advice needs to reflect that.
Yeah, makes total sense. And speaking of planning for the future, let's talk Social Security. CNBC's got an article about anxieties surrounding its future, new laws adding to costs just as funding's getting tight.
This worries a lot of people, and rightfully so. The article breaks down what's stressing Social Security and gives practical advice on planning for retirement with all this uncertainty.
Yeah, it's a tricky situation for sure, and it highlights the need for a good retirement plan that doesn't just bank on Social Security. But hey, CNBC also has an article on a lighter note about the lack of affordable starter homes here in the U.S.
Yeah, it seems like owning a home is getting harder and harder for first-time buyers. What's causing this?
Well, the article says there's been a big drop in the construction of those smaller, more affordable homes. They used to be a much bigger part of new construction, but not anymore.
So what happened? Why aren't builders focusing on those affordable options? There are a few things going on. Rising construction costs are definitely part of it. Building homes is just more expensive now, and buyers end up paying for that. And then there's zoning regulations. In a lot of areas, zoning laws make it harder, sometimes impossible, to build those smaller, denser homes. And then there's also a shift in demand. Lots of builders are focusing on bigger, fancier homes because that's where they can make more money.
It's a tough spot. Makes things harder for first-time buyers, that's for sure. But let's step outside the U.S. for a second and look at what's happening globally. MarketWatch says oil prices are climbing again after a short dip. What's going on there?
Oil prices, always up and down, influenced by so many things, geopolitical stuff, global demand. Even the weather can make prices jump around this time. It looks like a few things are pushing prices up. Tensions in oil-producing areas, high demand from China and India, even worries about supply problems because of the bad winter weather in parts of the U.S. and Europe.
So kind of perfect storm for oil prices right now. But then there's Saudi Arabia doing something completely different. CNBC reports they're putting a massive $100 billion into mining. Looks like they're really serious about moving away from just oil.
This is huge for Saudi Arabia. Could really change the global mining industry. Basically, they're saying we're not just an oil country anymore. We're a mining force now. And with all their resources and money, they could definitely pull it off.
This is like a real-life Monopoly game with all these power moves happening now back to the corporate world. Looks like Goldman Sachs is predicting a jump in mergers and acquisitions this year. They even release a list of companies they think are ready to be bought out.
That's always interesting to watch. Mergers and acquisitions can show confidence in the market, but they can also lead to fewer companies and even job losses. It's like a two-sided coin.
And CNBC says one company that might be up for grabs is Beacon Roofing. They got a nice offer from QXO, 124.25 per share. No word if they'll take it, but it'll be fun to see what happens.
For sure. Now let's jump into AI. Things are changing fast there. NVIDIA-backed AI video platform Synthesia just doubled in value, now worth a whopping $2.1 billion.
Synthesia. Gotta admit, I haven't heard of them. What do they do?
They're an AI video platform. You can create videos with these super realistic synthetic avatars, like making a marketing video or training stuff without ever having to actually film anything.
Wow, that's straight out of sci-fi. No wonder their value is going through the roof.
And it's not just Synthesia. Microsoft's making big moves in AI, too. CNBC says they're rolling out a new pay-as-you-go option for their 365 Copilot chat for businesses.
So how's this different from what they already have? Are they going head-to-head with Synthesia?
Not really. Copilot Chat's more of a tool to help you get things done. Uses AI to help with emails, summarizing documents, scheduling meetings, and this new pay-as-you-go model is a flexible option compared to their subscription plan. Might be better for businesses that don't want to commit to a whole subscription.
So it's all about making AI easier to get and cheaper for all kinds of businesses. But wasn't there something about Google doing something similar with their workspace plans?
You got it. Seeking Alpha says Google's dropping their AI add-on fee. Now all their workspace plans have AI features for free.
That's bold. They're really trying to stay ahead, and the AI game has to put some pressure on Microsoft and other companies in the productivity software world, right?
Absolutely. It's a big move, and it'll be interesting to see how it changes the industry now. Let's look at some of the major players in finance. BlackRock, the biggest asset manager in the world, just announced they had a record $11.6 trillion in assets in the fourth quarter.
That is a mind-blowing amount of money with that kind of power. They must have a huge influence on the global economy.
No question about it. And speaking of influential figures, the SEC is suing Elon Musk, saying he didn't properly disclose his Twitter ownership. CNBC says he's being accused of breaking securities law by getting Twitter shares at artificially low prices.
Seems like Elon Musk is always in the headlines for something. This definitely adds to his already controversial image.
You said it, more corporate news. Mark Waidman, a top guy at BlackRock, was seen as a possible replacement for CEO Larry Fink. He's leaving the company. CNBC thinks this could shake things up at the top of BlackRock.
That's big news. Makes you wonder what it means for BlackRock and who's going to be in charge.
Hard to tell right now, but definitely something to keep an eye on. And on a different note, Intel's turning their venture capital arm, Intel Capital, into its own separate company. CNBC says this will help them get more outside funding and be even more active in the venture capital world.
So is this a sign Intel's moving away from making chips their main thing?
Not necessarily. Looks like it's part of a bigger plan to streamline things and keep up with the changing tech world. They had tough competition in the chip market lately, and this might be a way for them to explore new opportunities and stay ahead of the game.
It's a lot to take in. And speaking of taking in, let's go back to something we talked about earlier, the special financial planning needs of people who don't have kids. MarketWatch has an article that really explores this and highlights the struggles child-free people have with traditional financial advice.
The author of the Childfree Guide to Life and Money makes a really strong argument for why financial planning advice needs to be more inclusive and fit different situations. She points out that a lot of traditional financial plans assume you'll have kids, which can lead to some bad advice for those who choose not to.
That's so true. It's important to find financial advice that matches your own goals and values, no matter what your family looks like. And on the topic of financial planning, let's go back to Social Security. CNBC has an article that dives deep into the worries about what's going to happen with it.
With the new law making Social Security benefits more expensive and less money to pay for them, it's something a lot of people are worried about. The article gives some smart advice on what to think about before taking those benefits and how to plan for retirement when things are so uncertain.
Definitely something everyone should be thinking about, no matter how old you are or how much you make.
Absolutely. And to complete our financial picture, CNBC also has an article looking at the housing market and why those starter homes are becoming so hard to find and expensive here in the US.
Yeah, we touched on this before, but I think it's worth a closer look what's causing this problem.
The article talks about a big drop in the construction of homes that are a normal size and price. Those kinds of homes used to be a much bigger part of new construction, but not so much anymore.
What's behind this shift away from more affordable housing?
It's complicated, tied to rising construction costs, zoning laws that often favor those bigger houses, and people wanting those fancier properties.
It's a tough break for people trying to buy their first home, especially with everything else going on in the economy.
It really is, and it shows how all these financial trends are connected. Inflation, interest rates, housing, jobs. It's a big web that affects us all in so many ways.
Yeah, it's amazing how it all comes together.
Sure.
So, what are the big takeaways here? What should our listeners really be paying attention to?
Well, one thing's for sure. The financial world never stands still. What looks like a sure bet today could be totally different tomorrow.
Like those Wells Fargo predictions about Tesla, right? Good reminder that even with all the excitement about a company or investment, gotta look past the headlines and understand the basics.
Exactly. And that brings up another important point. Got to stay informed, whether it's inflation reports, how interest rates affect your investments, global shifts like Saudi Arabia going big on mining. Knowledge is key in finance.
It can be a bit overwhelming, though. So much info, always changing. How can our listeners cut through the noise and focus on what really matters?
That's where critical thinking comes in. Don't believe everything you read or hear. Look for different opinions, consider who's giving you the info, and always ask yourself, why is this being said and who benefits from it?
It's about connecting those dots, seeing the big picture, not getting swept up in the hype or the fear that surrounds financial news.
Exactly. And maybe most importantly, never stop learning. Finance is always changing, so stay curious, keep looking for new knowledge. That's key.
And that's what we're here for, right? Helping our listeners navigate this crazy world and make sense of it all.
Absolutely. We covered a lot today. Inflation, banks, tech trends, AI, global changes, even Social Security and the housing market. A lot to take in, but hopefully it gives our listeners a better grasp of what's shaping our financial world.
So as we wrap up this deep dive, here's something to think about. How do you think all these trends we talked about, from the rise of AI to the changing global landscape, will affect your financial future? What can you do today to get ready for the opportunities and challenges ahead? Remember, in the world of finance, knowledge is power. Stay informed, stay curious, and keep on diving deeper.